Hey there, future stock market moguls. Welcome back to the channel. If you've ever found yourself wondering whether you should be a fast-paced, quick-thinking day trader or a slow and steady buy-and-hold investor, you're in the right place. Today, we're diving deep into the world of day trading versus buy-and-hold investing. We'll break down the pros, the cons, and the key differences between these two strategies. And trust me, by the end of this video, you'll know exactly which one fits your style and your wallet. But before we get started, make sure to smash that like button, subscribe to the channel if you haven't already, and hit that notification bell so you never miss out on our financial deep dives. And hey, we'd love to hear your thoughts, so comment down below. Are you a day trader or a buy and hold investor? Let's get this debate going. And don't forget to share this video with your friends who are still scratching their heads about these two strategies. It's time to get smart about money, folks. All right, let's kick things off with day trading, aka the roller coaster ride of the stock market. If you've ever watched someone frantically buying and selling stocks on their computer screen, you've probably witnessed a day trader in action. The goal of day trading is to buy and sell stocks within the same day, sometimes even multiple times a day. It's fast, it's high risk, and it's all about capitalizing on short-term price fluctuations. Imagine it like this. You're in a race car, you've got the pedal to the metal, you're weaving in and out of traffic, and you're trying to make sure you don't crash and burn. Sounds exhilarating, right? But hey, the crash and burn part is a real risk. If you don't know what you're doing, that roller coaster can easily derail. Let's talk about the pros of day trading. First of all, it's all about quick profits. If you're skilled, or maybe just lucky, you can turn a small investment into a big return in a single day. Plus, you're not tied down to a long-term commitment. You can be out of a trade in minutes, hours, or by the end of the day. This strategy also allows you to use leverage, meaning you can control more capital with less of your own money. But here's the catch. Leverage can lead to huge gains and even bigger losses. Now, let's not sugarcoat it. Day trading is also risky. You need to be glued to the screen making split-second decisions, and unless you're really good at technical analysis and understand market trends, it can be a recipe for disaster. You've got to have nerves of steel and a really good sense of when to cut your losses. And trust me, cutting losses is hard. Ever heard the phrase, don't let your emotions get the best of you? Well, they'll try. Day trading is also time-consuming. Forget your weekend brunches or casual afternoon naps. You'll need to be on top of the market at all times. Plus, let's not forget the commissions and fees involved. Each trade you make, whether you win or lose, usually comes with some kind of transaction fee. So while you're trying to beat the market, you might also be paying a lot of small fees that add up over time. Now, let's take a breath and look at buy and hold investing. This strategy is the slow and steady approach. No wild roller coasters here, folks. If day trading is like a sprint, buy and hold is like a marathon. You buy an asset, whether that's stocks, bonds, or real estate, and you hold on to it for the long term. We're talking years, even decades. It's kind of like planting a tree. You invest your money, water it with time, and over the years it grows into something beautiful. You're not in a rush to cash out, and you're certainly not looking for quick wins. Buy and hold is about the long-term growth of your investments, whether you're investing in blue-chip stocks, index funds, or other long-term assets. So, what are the pros of this strategy? For starters, it's less stressful. You don't have to worry about minute-by-minute fluctuations in the market. Buy and hold investors tend to be more relaxed because they understand that markets go up, they go down, and in the long run, the trend is typically up. Also, this strategy is time efficient. You don't need to spend hours staring at stock charts or listening to podcasts about the next hot stock. You buy, you hold, and you go enjoy life, whether that's sipping coffee at a cafe or hitting the gym without stressing over your stock portfolio. And let's not forget the power of compounding. Buy and hold allows your investments to grow over time, and, well, the longer you stay invested, the more you can benefit from the magic of compound interest. Plus, you're less likely to fall for the temptation to sell when the market gets volatile, which, honestly, can often lead to bad decisions. Now, you may have heard that buy and hold is like watching paint dry. Boring, but it gets the job done. And honestly, there's a little truth to that. It's less exciting than day trading, but patience pays off. Just ask anyone who invested in Amazon or Apple 20 years ago. Those folks are sitting pretty right now. All right, now that you've heard the basics of both strategies, let's break it down and compare day trading and buy and hold side by side. Here's what you need to know. Risk. Day trading is like walking on a tightrope. You can make huge profits, but one wrong move and you're in trouble. Buy and hold is much safer, and as long as you don't panic during market dips, you're more likely to see steady growth over time. Time commitment. Day trading takes a lot of time and attention. You're checking charts, reading news, and making trades all day long. Buy and hold, minimal time commitment. You just buy and chill. Returns day trading offers the chance for quick profits, but quick losses too. Buy and hold is about long-term returns, which tend to be more stable and consistent. Stress levels. Day trading is high stress. You're watching your money change by the minute. Buy and hold, pretty chill, especially when you realize that you've got decades to grow your wealth. Skill-level day trading requires a ton of expertise. You need to know how to read charts, news, and trends. Buy and hold. Anyone can do it with a bit of research. It's less about expertise and more about patience. Okay, so which strategy is right for you? Well, it really depends on your goals, risk tolerance, and how much time you want to spend managing your investments. If you're the type of person who loves the thrill of the chase and you have the time and energy to monitor the markets constantly, day trading might be your thing. But remember, it's a high-risk, high-reward game. On the other hand, if you want to set it and forget it, have a more relaxed approach and trust in the power of long-term growth, then buy and hold is probably the way to go. At the end of the day, there's no one-size-fits-all answer. It's all about what feels right for you and your lifestyle. All right, that's a wrap, folks. Now it's your turn. Let me know in the comments. Are you team day trading or team buy and hold? What's your investment strategy and why? And if you learned something new today, make sure to like this video, subscribe to the channel, and share this with anyone who might be deciding which path to take. We're building an army of smart investors, people. Thanks for watching, and remember, no matter what strategy you choose, stay patient, stay smart, and keep investing in your future. See you next time.